So thanks for having me. My goal here is to be educational. It's basically to present how payments work in the online processing world. I knew nothing about payments about 7 years ago and went to work for a credit card processor. And the only thing I really knew was PayPal. And after starting work for a processor, holy cow, just so much information that I'd like to continue to educate people and let them know what else is out there. Yeah, so it's definitely a love-hate relationship. I love payments, I love moving money around, but I hate certain things that are associated with fees and PCI and things like that. So a little bit about me. I'm the co-founder of Pay. I'm also the technical advisor for EMVCo, which is a collaboration of Visa, MasterCard, Amex, Discover, and JCB. I used to be the VP of IT for a credit card processor. Leader just became the new leader for the WordPress group in Memphis, Tennessee. We actually took a lot of the stuff that you guys do here and brought it to Memphis. One of them being if you don't show up 2 times in a row, we actually do kick you out the 3rd time. At least we put you at the bottom of the list. We did that for the first time this particular month. We introduced a help desk, which has been taken off pretty well. And we also have the benefit of having Otto in our group, which Otto works for WordPress and does a lot of the plugins and standards and things like that. My background is in forensics and security. Former board member of OWASP, ISSA, InfraGard. I am a Ruby developer. Also do a lot of system administrator stuff in Docker, and I think PCI sucks. Royally. So now learn about me. I want to just poll my audience if I may. So maybe a show of hands. How many of you are using an e-commerce site today? Excellent. Is it WooCommerce? Okay. How many of you know what your credit card processing rate is today? All right. And how many of you think 2.9 and 30 cents per transaction is normal? Awesome. All right, so full disclosure, my opinions might not be the opinions of anybody. I do work for a payments company, but we are not a processor, so I'm not here to sell you processing. I'm here to educate you on what else is out there because I can't stand the processing world. I do think PCI is a load of crap. I think interchange is a scam. We'll get into why that is. I do think that there is a way to actually eliminate online fraud, and I'll show you some of the techniques and things that are out there to do that. And I love WooCommerce and I love WordPress. And yeah.
What is PCI?
So PCI is a standard that the credit card processors put on you. So if you store credit card information or if you transmit credit card information, it's the standard to make it secure.
Okay.
Thank you. And questions throughout is absolutely encouraged. So I started working for a processor and I learned a ton of things. Things like hidden fees, PCI fees, how the actual transactions happen, why we need gateways, why we need processors, and things like that. So I just quickly wanted to basically talk about how the credit card transaction flows, because that was one of the first things that actually blew my mind is using PayPal or other things. I didn't realize where the money was actually moving, right? So you go to a website and you add things to a shopping cart. You go to checkout, you throw your credit card information in there and you hit submit. And to me that was it. The money moved around, it was magical and things like that. What I didn't realize is basically what happens there is that transaction actually goes to a gateway, and that gateway is basically the start point of what we call a credit card processor. And a credit card processor is a third party between your bank and Visa and MasterCard. And the reason that we have to have those is because the people that actually own Visa, MasterCard are the banks. So that kind of blew my mind at first, and that made a little bit more sense of why we have credit processors, is because the government basically regulated, said, hey, look, you can't go directly to Visa or directly to MasterCard because it could create a monopoly, right? So they basically created these third-party processors like PayPal, Braintree, Stripe, First Data, Vantif, all these people that are basically calling you probably on a daily basis trying to steal your credit card rates, right? So the reason that they created those was to prevent the monopoly. So that's also why our credit card fees are at 2.9% and 30 cents per transaction, because every time your money moves from a gateway to a processor to the bank to the merchant's bank, everybody takes a penny or something along the line, right? So that is what we call basically interchange. So Visa, MasterCard has a direct fee that's associated with that, and then everybody piles on all this other stuff, right? Which to me is makes me very angry because the original concept of doing it this way is because they wanted some insurance of moving money, right? So they wanted to protect themselves against fraud. So in order to do that, they basically all took a piece of it to move that money around. And essentially, if you can cut out fraud, in my opinion, I think you should also cut out the fees. But as we see today, fees are getting higher and higher. And even though we have the tools to make fraud go lower and lower, that's just not happening. So in WooCommerce, I talk basically about credit card processors. This is basically the WooCommerce of adding a credit card processor to it, and also there's some gateways. I think there's 129 processors, or there might be 129 pages. My apologies. But Stripe seems to be an extremely popular one. Again, PayPal. Then you start seeing First Data, WorldPay. So looking at all these just kind of blows your mind of which one to pick, how to pick it, why to pick it, and usually the decision is made based on not price, but how easy it is to actually install on your website, right? So when we first built an e-commerce site for a company I worked for, we went to our bank and asked if we could start taking credit card information or credit card transactions, and they said absolutely. Here's our API documentation, and they gave me like a 500-page document, right? And I'm looking at it going, holy cow, right? So I looked at the other developers and I'm like, how long is this going to take us to do this? And one developer said, well, it'll take you guys forever to do that, but PayPal will take me like 2 seconds to copy and paste, right? And so that's what a lot of people do now, is they basically copy and paste, install plugins, because again, it's very convenient, it's easy. It might be recommended to do that way, but what's not seen in the background is basically what I would consider how we've been brainwashed to accept the fact that because there's the ease of use to actually do something like this, that 2.9% and 30 cents per transaction is okay to give away on your product on a per transaction basis, and it really upsets me that we've actually come to that. And again, basically the reason that is there is based on the credit card fraud. So even though I don't know if there's any high risk or medium risk companies that are selling things here, but if you're a medium or high risk, then what they do is they actually jack your rate up even higher. So mattress companies actually pay closer to 5 to 8%. And the reason for this is because of what we call chargebacks or friendly fraud. So a chargeback or friendly fraud is basically me ordering something online, it comes to my door, I sign for it, FedEx guy walks away, I open up the mattress, I sleep in it for a day, it's too firm, so I call the mattress company and I say, hey, way too firm, can I get something else? And they say, hey, did you open it? And I said, yes. And they're like, you got to keep it. And it's written all over the website, it's in their return policy, et cetera, but that just kind of ticks me off. So what I do is I flip my credit card over, I call the number, and I basically charge back because I have zero liability as an end user for that product. So now as a merchant selling something, you're out the item and you're out $1,000 or however much the charge was. This is basically on online fraud, right? So if you think about it, if we went physically into the store and we swiped our card and we signed for it, and then we walked out and we tried the same method, the merchant actually has the ability to fight you. They have the ability to say, I know he got it, here's his signature, it's at his house, to where on the online, there's not that digital proof. There's no proof that I've actually gotten that item. I can basically just call, say it never got delivered, it was stolen en route, service is not rendered, and that's basically what has caused this fluctuation, or 2.9 and 30 cents to be a standard, right? Because they kind of expect this friendly fraud to keep happening. When Domino's actually went from phone calls to EMV code chips and things like that, I don't know if you noticed, but at least in the Memphis area, Domino's and Pizza Hut force you to go on their website or on an app to actually order pizza now. And they've gone from a card present to a card not present situation by doing this. And it's a huge thing for college students right now to basically charge back pizza. So their risk as a merchant has gone through the roof, even though it's kind of friendly fraud.
That's
so
how you pay for the pizza, isn't it?
That's how we paid for the pizzas tonight, exactly. Man, maybe she's recording this too, so that might be how we paid for it tonight, but yeah. So hopefully that just kind of gives you a sense of history of all the things that I've kind of learned in the last 7 years, what has upset me, and kind of why I've taken a step back away from the payment industry, kind of looked at it to try to really get rid of fraud and help end users and merchants use payments in a better space. So as just kind of an example, what we see here is basically the difference between what I consider a very easy installation with a high price to a more difficult installation with lower risk, which shows you that the price actually decreases. I'm going to try very hard not to be pitchy on this part, because this is kind of what we do, but I think it's really good knowledge as a merchant, because I understand that every penny that you can save goes back into your store and into your economy. So PayPal and Stripe have really easy install. They basically do a 2.9, sometimes based on volume. You can get them down to maybe a 2.7% flat rate. That's for Visa, MasterCard, American Express, and Discover. And so does Stripe. Again, same thing. Based on volume, they can bring that down a little bit. And then you can see what the processing fee is based on a $100 purchase, and then what you pocket and basically what they capture. So for me, giving away that $3.20 just, again, makes me extremely angry. Yes?
What about how it's perceived by shoppers? Because, like, if I see PayPal, I know what that is, I know what to expect, and for better or for worse, I feel safe there because I know what's going to happen. The others, I don't know. So if I was making a choice of whether to shop somewhere better than PayPal or Stripe, how would you PayPal?
Absolutely. So that's a great point. And I think the other technologies are catching up very quickly. First Data is actually the largest processor in the United States. They are extremely larger than PayPal is.
I didn't notice that.
Because mostly their game is swipe. So when you go into a store and you put your thing in, even though the terminal might say something else, Sony, IBM, the physical terminal, the third-party processor that is actually charging in the background is going to be First Data. And they're what we call brick and mortar or card present. That's a lot of the processors. That's how they basically came into this market, is selling terminals, leasing terminals, selling POS systems, things like that. And they're catching up. So Stripe and Braintree was actually purchased by PayPal. They made their claim to fame because they made it extremely easy for us to basically just plug and play their technology into online transactions. And you're going to start seeing First Data, Vantif, some of these other names that you probably haven't heard of starting to catch up a little bit. First Data is what I would consider a traditional processor, right? So if I had the choice of going from what we call flat rate charge or something called Interchange Plus, I always recommend going Interchange Plus. And what that means is basically, you were talking about the end user of swiping their card, right? So everybody here probably has a different credit card. Some of us might have the same credit card, but a lot of us might have rewards cards as well. So the merchants actually pay for those rewards, right? So if you have a 3% or a whatever percent Capital One card or something like that, when you swipe it, that's actually the interchange that's being paid there. That is the base minimum that Visa, MasterCard is charging to run money through their network. The plus is basically what all the third parties are going to make on the way down. The reason that a lot of people don't use Interchange Plus is because it's an accounting nightmare. Because, there's probably close to 40 of us in here. If we all use 40 different cards at 40 different rates, your accountant's just going to pull their hair out, or you're just going to look at this bill and go, holy cow, it's much easier just to go to a flat rate because I know exactly what I'm paying rather than to go to Interchange Plus. And a lot of people just go to Interchange Plus for 1, maybe 2 months, and then they switch back to a flat rate because it looks visual and it makes more sense to them. What I highly recommend is stick in there for 4 to 6 months and then do an analysis. Actually add up all and see what your true savings are compared to a 2.9% flat rate and a 30-cent per transaction. And you're going to see a huge amount of money be able to go back into your company if you do something like an Interchange Plus. For the same, you'll see the same $100 for a Visa plus a charge for First Data is going to save you a good chunk of change there. Maybe that's not a lot to some people, but if you're doing $1 million a month, $100,000 a month, then again you're going to start seeing those savings. So now we kind of get to the fraud part, which is our last column. And what we have done here is we kind of talked about that signature that was for when you have card present, when you walk in there and you swipe your card and then you sign. Well, there's nothing like that online for the merchants to be able to protect themselves. At least nobody actually promotes it here in the United States. But there actually is something, it's called Verify by Visa and Secure Code. And this is basically a authentication network that was put out by Visa, MasterCard. American Express and Discover also have it, but not in the United States. And it came out about 12, 13 years ago. And what it does is it basically allows the merchant to send the credit card information to Visa, MasterCard, say, hey, this is James, he's about to purchase something, should I be worried about it? And if they say, yes, you should be worried about it, then I can force James to authenticate with his bank. Maybe a PIN, maybe a text notification, depending on what the bank actually wants to do. Now, the reason why it's not in Europe and Asia, this is how e-commerce is done. Authentication through this program is done every single time, and they're completely used to it. In the United States, when we introduced this, it caused shopping cart abandonment. So merchants said, screw this, let's get rid of it, right? Until the EMV chips started being released, we're seeing a huge amount of fraud being shifted from the card present world to the card not present world, because hackers can't clone these chips. So what they're doing is they're taking the numbers and going online and stealing things that way. So now you're seeing a ton of merchants basically say, hey, we need some protection here because we're losing from friendly fraud and we're losing from hackers. So this program is basically does that. The reason that a lot of merchants don't use it is because it's, again, 12-year-old technology. It's very cumbersome as a developer to integrate into it. And again, it causes some shopping cart abandonment. Yes, sir?
In terms of accounting fees and the fees around PCI compliance, at what point does it become cost effective to switch over from PayPal or Stripe to these other vendors? Because I imagine you're saving money on if your income is below a certain threshold, or is that assumption wrong?
That I love it. Yeah. So the question is at what point do you get out of the PayPal method because they're handling the PCI and the fraud in a bundle compared to going to a first data to where you have to handle the PCI and other things yourselves? Like, what is that threshold there to come? And I love that question because that's the thinking of a lot of people as well. Against simplicity, is okay to pay that 2.9%. And unfortunately, it's a wrong assumption. So you can actually get a traditional first data account with something like an authorized.net or an NMI gateway that does the same exact thing as a PayPal or a Stripe. So when you go to checkout, it'll basically, instead of the PayPal or the other ones that we had listed here, they started basically creating these. So the authorized.net, there's actually a first data plugin there. I didn't capture, but NMI, some other gateways, basically protect. They do the tokenization. They don't house any credit card information on the site itself. So they have that bundle, if you will, as well. And I should say that if you basically don't like interchange and you do want to go back to a flat rate, for the love of God, don't pay 2.9% and 30 cents per transaction. Go back to a traditional ISO and say, hey, look, instead of interchange, 2.3. They're a race to the bottom, right? So they make money on having merchant accounts. Like, their salespeople make money on quota of just getting merchant accounts. So there is a huge wiggle room of being able to talk down flat rate. Don't let them talk you into 2.9 and 30 cents per transaction. Whether or not PayPal and Stripe will do that, probably not, because they don't really care. But from a traditional processor, they will. You basically go to them and say, hey, look, Stripe is much better technology than you. Give me a lower rate and maybe I'll consider coming over to you. So the Verify by Visa. So in the perfect world, if someone came to me and said, hey, look, do my payment platform for me, what I would talk them into is basically using a traditional ISO or processor, using Verify by Visa and secure code, because having that authentication or verification at the end user lowers the risk and fraud, so therefore it lowers your interchange rate. For me personally, if someone is actually doing a traditional processor, they're actually authenticating using the Visa and MasterCard, I think they should get rid of interchange, because you have authenticated and actually proved to Visa that is the end user. Unfortunately, they don't do that, but they do get it pretty low to where it makes it a little bit feasible to do that. And then again, it's basically bringing a digital signature is kind of what we call it, to prevent the chargebacks and the fraud. So now if you basically have a signature, a digital signature with the Verify by Visa or the secure code, when someone goes to charge that back on your website, it actually doesn't come to you, it goes back to the issuing bank. It goes right to the issuing bank because it says, hey, no, they have a signature, they have verified this user paid for this, so therefore you guys get the chargeback, not the merchant. And what we call that in the processing world is a liability shift. So with the card present, when you swipe and sign, the liability shift goes to the issuing bank. For online, if you actually have the digital signature, again, that liability shift helps the merchant on that side as well. So if you were to actually do this, 2 years ago, it probably would cost you $200,000 to develop this for your website, to get a certification, to do all of this. The other people that actually do this charge an ungodly amount of money to get these particular digital signatures, and that's basically what we started doing at Pay, is we basically brought this fraud prevention tool for processors in a very simple way. And the two things that we created right off the bat was a WooCommerce plugin and a Gravity Forms plugin. So the WooCommerce plugin, we loved the way that Stripe, actually the end user checkout experiences. So they have kind of this modal. It basically, shadows the things in the background. It's in your face. There's no about to doubt it. You're there to actually pay for something. So what you do is you throw your name, your card number, this and that. We help with PCI standards to where this is kind of more of a redirect or an iframe, so that PCI bundle, we don't store any credit card information on your site, keeping you out PCI. We have the security sense of your site is going to get hacked, our site is going to get hacked. So we do security in a completely different way, to where we also don't do cards on our network either. When we launched this, what we actually found out is a lot of end users actually weren't using WooCommerce, but they were using WordPress. And a lot of charities, a lot of nonprofits basically didn't want to install Woo, add a product that was like $1 donation, or something to that effect, and keep adding products for different things. So that's where we came up with creating a Gravity Form plugin. Any Gravity Form users here? I love Gravity Forms. I know it costs money, but I mean, it is a very, very powerful tool. So you can create just a regular form. You can do logic with it. I don't know if someone can come and give a Gravity Forms session, but it's freaking awesome. But what we've been able to do is you can add a form with a drop down, or leave it open to just add how much you want to donate, and then again that same checkout experience of the pop-up basically does that. And that's it. Couple questions? All right. Yes, sir.
How do things like Apple Pay go into this whole mix? Because like what I understand, at least if I understood like Apple's documentation, it's like they say like no charge goes to you, it's all on the credit card merchants. But then like most people, you have to like sign up with Stripe to use Apple Pay. So how do things like that work?
Right. So Apple Pay, it's going to be interesting to see how they do that. So we actually started with a wallet. We actually started as a wallet company and then kind of fell into traditional payments. We wanted a differentiator between our wallet and kind of other wallets, so that's why we tied into the digital signatures. Apple Pay kind of has that. Apple did it correctly compared to where Google Wallet was an epic failure. They just wanted to be the payment mechanism. So yeah, you still have to get a Stripe or a processor or something in the background, and then it'll be interesting to see how that methodology works. But it'll be interesting to see how it works. Yeah, we're excited about that. Yeah. Yes, ma'am.
Is there any data about comparison of abandonment, of the dollars lost in abandonment versus savings in the verified method?
Yeah, so that was one of the biggest things we actually had to tackle, was that question. So the question is there any stats on shopping cart abandonment compared to the savings that you might get with that? So what we did is we came up with 3 features. We came up with a, we call show authentication. So if someone does get authenticated, we show that box, which does cause a shopping cart abandonment. The cards that are actually challenged is somewhere between 3 and 6%. We also basically gave the option of never show. So basically, if you do get challenged, we basically say cancel the Verify by Visa side and just send this through as a regular transaction. That way you don't create any shopping cart abandonment. And then the third option is try another card, or if you, depending on the gateway that you use, you could actually send it to maybe another fraud prevention tool as well. So you can make it as frictionless as you want. So that was one of the things we kind of threw in there. Our main competitor here really ruined, in my opinion, ruined how Verify by Visa and Secure Code was launched in the United States. Because again, the way that it was popped up, the shopping cart abandonment, and they really used the program for a marketing tool to sell other services, and they didn't allow other people to come into this marketplace, because if you came in and tried to help with authentication, they would sue you and just put you out of the market really, really fast. So that was another reason why we didn't see a lot of adoption of this particular technology. Yes, sir.
Are you dealing only with standard traditional currency, or have y'all looked into cryptocurrency for fraud prevention especially?
So for now, we have not looked at any crypto. We are going to just enter the market as protection for Visa and MasterCard. I am on the technical advisor for, and we're going to be launching the next version of this hopefully later this year, which will have some really interesting things for that. So you don't actually, one of the things that we're going to launch is you don't actually have to use a transaction to verify the user. So for people that are doing subscriptions and reoccurring payments, things like that, if you want to, pre-auth or find out if this particular person is legit, but you don't want to charge the card until maybe their trial or things like that is over, that'll be launching out as well. Thank you so much, appreciate it.